By 2030, the government of Mauritius is hoping to double the size of the country's financial services sector. To reach this objective, Mauritian banks are expected to play a pivotal role as they expand their footprint across the region and invest in new technologies, products and services. To learn more about these developments, I'm joined by Andrew Bainbridge, who is the Chief Executive Officer of SBM Group. Andrew, thank you for joining me today.
Thank you, James.
Let's start by looking at Mauritius as a financial centre. So obviously today's backdrop is a challenging one. We're seeing tighter regulation, trade tensions, and obviously there's competition from other regional centres as well. How would you judge Mauritius is doing today against that sort of tougher environment?
I think Mauritius has a number of factors in its favour. It's been a miraculous economy for the last 50 years, transforming from being a monocrop economy through textiles production, through to financial services, and is now continuing to build on that by moving up the value chain in financial services. Its long relationship with India, a long and close relationship, has served it very well, and its close links with the African continent serve it really well. With a very good central bank, the Bank of Mauritius, which is developing regulation and applying it, which you know as well as I do is the really difficult and important part of the equation. I think Mauritius is well poised for further growth. If you look at trade tensions, I get that. I read your newspaper every day. I see that. But if you then look at the detail around the Indian Ocean rim, recent forecasts are that will grow at about twice the rate of global growth for the next 10, 15 years. You look at where we're positioned, and geographically we're well positioned to capitalise on that. I tend to see Mauritius, excluding the trading that goes on in Johannesburg, as the financial capital of Africa.
So you mentioned obviously growing trade is an exciting region, very dynamic. In terms of that bigger trade picture and Mauritius' position that you mentioned, so between sort of Asia, between Africa, how is SBM Group sort of positioning itself in terms of its longer term strategy with that in mind?
Well, we've positioned ourselves in India, where we were very lucky. The Prime Minister of Mauritius recently inaugurated our wholly owned subsidiary there. We've established a very solid business in Kenya with 60 branches across Kenya, and obviously we're one of the leading banks in Mauritius. And what that positions us almost uniquely to do, I think, is to help businesses as they grow, as they start to export. Obviously, there's a good trade corridor between India and Africa, and we're the only bank that's positioned itself in a way to enable both ends of that trade corridor to be serviced. So if you're building a business for the future, if you're looking to export, you're looking to grow, then we can help you. We can help you with the access to services in Mauritius, the access to finance out of Mauritius, the access to trade and working capital in Kenya, in Mauritius, in India. So I see us very much as a connector.
Okay, well, it's interesting because let's touch on Kenya now, because obviously over the last or recent times, SBM is making headlines in terms of its move into Kenya. So just talk us through, I guess, sort of the rationale for that Kenya acquisition, and also in terms of the long-term opportunity and challenges that you see in the country.
Okay, so the Kenya acquisition predates my arriving at SBM Holdings, but I think it's very much the right thing to do. The governor of the central bank announced that there was no intention to issue new banking licenses, so the way to go in was to acquire a bank, which we did. We acquired a small bank, and then we acquired assets and liabilities out of another bank, but not the bank itself. And that gives us 60 branches, 700 staff, and 200,000 customers. And that's really exciting because that's a platform that you can build on and grow from. As you know as well as I do, Kenya has a really vibrant business community. It's got a well-educated workforce, and I see it's the logical entry point for East Africa, whether it's financially through Nairobi or physically through Mombasa. Kenya is the kind of beating heart of East Africa. So I see the prospects for that. I know growth has slowed over the last year and a half for various reasons, but the prospects for Kenya remain very good, I think. For us, you look at the trade flows between Asia and Africa, you look at where the projections are going to go, and you think, well, the logical place is we need a base on the eastern seaboard of Africa, and that really does narrow it down to Kenya.
Okay, that's the hub. And moving to India briefly now, so you mentioned the wholly owned subsidiary license that you received. It's not an easy market in which to bank in some respects. What are your prospects in the longer term in India?
I think India is a very difficult market simply because it has a number of very good banks there. It's huge. And we have to be very careful about how we are relevant. So what we've done is we've looked hard, and as part of our strategy, as I said earlier, we're seeing ourselves as a connector bank. We can connect things up. So our ambitions for India are to serve retail clients, obviously, and we've recently introduced internet banking there. We're in the process of waiting for approval to introduce mobile banking. But the exciting part for me, the part that really connects it to the rest of the group, is the ability to finance international trade, to help the commercial businesses in India that have established themselves, that have built a bit of a track record, but aren't yet the giants like Tata, etc. But these mid-sized businesses that need help. And we can help them in India, we can help them in Kenya, and we can help them move from one to the other.
Okay, well, on that point, a final question. When you're catering to these businesses, catering to new clients across your sort of footprint across the Indian Ocean, how important is sort of product and service innovation? I'm thinking here of sort of new technologies, new fintech offerings, and so on. What role is this playing in your growth story?
The products and services that we provide to our clients are obviously critical. And I think it's very easy for people to come out with things which are hugely innovative, but not necessarily of much utility to clients. So I could talk a great deal about the wealth products that we've been introducing in Mauritius, which are giving Mauritians opportunities to save and invest for the future in a different way, which I'm really pleased about. I could talk about our debt-raising capabilities. We used our team to raise our own Tier 2 bond last year that was 50% oversubscribed. We've done some very exciting work with the first depository receipts ever in Mauritius for Afrexim. But actually, the thing that struck me most in my time at SBM was when I was buying something at an event about 3 months ago from a lady who was selling some goods. And I said, "I'm sorry, I don't have enough money." And she said, "Oh, you can pay by credit card." And she pulled out something that was no bigger than the palm of my hand, stuck my credit card into it, and authorized it. And it was an SBM product called Move, and it's a mobile connector for credit cards through your mobile phone. Acts in about 20 seconds. And I thought, for all the other great things we do, this was something that genuinely made a commercial business easier to operate. So product services really at the heart of what we offer, obviously, but they've got to be what our clients really value.
Andrew, thank you very much.
Thank you very much, James.